Hello traders, happy Wednesday. How are you today? Please give me some okay that you can hear me and that you can see my screen. Perfecto. So thank you very much, guys. So let's begin. Okay, so quick update about some of the positions we had in our discussion for Monday on the shorter view. The dollar yen, the euro yen, sorry. The view was how do I go back here? Here. The view was that as long as we are holding this trend line, we are after sell opportunities from this top. Quick reminder why daily did not have any divergence against us on the rally. The expectations wasn't actually still remains, but the expectations were like that. 1, 2, to look for the sell opportunity. 4-hour formed bearish hidden divergence looked like a classical sell with all the signs to be right there. So what we got there was this trendline breakout, also divergence, beautifully formed and set. Technically, everything was ready there, including the principle of lower lows, but the market did not agree with us. So this trade failed. And now the biggest question is what's happening with the euro yen from here on. According to the daily, there is still no divergence. So daily could easily play it this way, still like planned. Alternatively, it could start and create its kind of ranging structure before any further trend decision. So the options are now basically different. Everything here is possible. Still, we are under bearish pressure with the bearish hidden divergence. The only thing that personally I don't like is the fact that, well, that was the first trend line that was failed. The big trend line still holding, this trend line still holding, and we don't have from the bigger corrections any lower lows. If we start recreate lower lows, then we can go and start looking to sell the rallies again. Until then, it's best and safest stay on the fence, sit on the fence, and look how it structures. So as for now, as for today, I removed the euro yen from my personal list. My idea from Monday didn't work out. Now it's time to look for something clearer. Dollar yen, the bearish idea was and remains in play for us. Quick reminder, daily double cycle, this is what we are trading. Bearish divergence in play. Each of these legs from the daily cycle was confirmed as a 4-hour chart cycle, and basically since that moment we were having this idea in our mind. Okay, so it still remains on, everything is still as it is. There is one thing to pay attention to. Now here is the setup we were talking about, right? The idea of the triple double trading. Okay, that was pretty much the idea we had in our mind. Now, what do we do in such case when we have triple double trend and breakout? Expect a trend continuation, right? But look what the market does since. Consolidation. Quick reminder, when the market is consolidating instead of regaining the fast momentum as expected, what is best to be done in such case? Reduce the exposures. Before I continue with the dollar yen, I want to remind you one of the things we had with the Nasdaq. Everything was amazingly perfect with this false breaks and convergence. However, the market was not impressed with this type of analysis. And after one straight move above this Fibonacci retracement of the first leg, straight move, cross in one leg above 61.8. Remember what I was talking about? This is the time to listen to the market and not to argue with the market and accept the fact that it doesn't agree with the beautiful lines I'm drawing. Instead of fighting with the market and go full risk, accept what the market tells us will prevent us to go full loss. And I want you to remember always, guys, part of making profits from trading is to cut the positions, the exposures, the losses, call it as you would like, but cut it earlier. So if you're risking, let's say for the case of the example, 1% per trade, but you managed to cut it on 0.5% or 0.6%, that means that for every single loss, you keep 0.5, 0.4, 0.4, 0.3% not in a loss. And after 10 trades, it's accumulating and it suddenly becomes 3% better results, or 4% better results, or 5% better results. You understand that? So it's very, very, very critical to remember that, to remind it for yourself, because as traders, we are mainly focused on what? Let's make money, right? Especially when we're new to the game. What we're interested in? Let's make money. Show me the strategy, show me the system. However, I always remind that trading is not about being right. Trading is not about making the most beautiful charts and analysis and expectations. Trading is about trading facts and making the bottom line. Numbers. You improved numbers not by drawing beautiful lines, but by taking the right actions when the market shows signs against you. And that works for both ways, in plus and in a minus. What do we do when we are running a plus and then the market shows signs against us? And what do we do when the price goes against us, but the market shows signs against us? Exactly like that happened on Nasdaq, and that was so far wonderful decision, as the last high was simply broken right after that. And same we have right now with dollar yen. Now, did the plan change? Of course not. Everything technically remained the same. We are still in the same cycle. However, with this price action, the market is telling us a story. There is no momentum. Remember, the multi-time frame combination, one of its beauties is that the market basically shows you where are your improved chances, bigger chances to get the move fast, to get the momentum done quick. But if something doesn't move, then it doesn't matter how good the analysis is. That means that there is no money in the market. And if there is no money in the market between the bulls and the bears, the moves can go random. And to avoid randomness from the market, we have to listen to its signs. That's why I wanted to start with that, guys, because it's very, very, very important. Now, Euro Yen, as we saw before, didn't offer us any way to get out. It simply went again and didn't give the chance to drop the risk. When something like that happens, we can't change the market. But when we do have the signs against us, we do have to listen to the market. Now, here's the good part. This is pretty much around the zone of the trend and breakout, pretty much around the entry, right? When we face something like that, we just drop the exposure. If it still crashes, we still make a great return here with much smaller risk. Okay? If it doesn't work out, then instead of losing, let's say 1%, the loss would be limited because we cut. You understand here the importance of that, guys? Now, how easy it is to convince yourself that everything still remains the same, nothing really changed, right? It's too easy to say I'll give it a chance, but normally when you say that, you basically say to the market, I don't believe you. I don't care what you say. I know better. My trend lines would be better, right? This is something I personally, I don't say it's good or bad, but I personally don't love to do. And after a while, you will learn the hard way that sometimes it's better to listen to the market, right? It tells you the whole story. But 100% I agree with you, Catherine. It's extremely hard to change conditions, right? Because it's so easy to stuck with our ideas. And you know what? It's not about getting stuck. It's about falling in love with the ideas. Because let's admit it. When you see something like that, right, and divergences, especially when you see that from beautiful presentations, right, like webinars and so on, where everything looks impressive, right? And that's correct, because in webinars you see examples, but when you deal with that live, the market always challenges you with different conditions. Now, when you take a look on something like that, it's hard really to not to expect to that, right? That's market structures. But once again, here comes the importance. Take a look on this example, just for example, without the divergence, nothing here, right? That also looked like we are going for deep correction, but it didn't. We did later, but on the first attempt, it didn't. So, with all the wish to see the price crashing, and it still might, it has all the reasons. But on the other view, when the market gives us the signs against, like it did now, there is a very good chance of seeing something like that, clearing some new high, making one more false break, and then making the move. Will that change the cycle? Of course not. But most definitely, what it will do is it will clean those traders who refuse to listen to the market and provide those who did listen, cut, and re-enter. Okay, that's the importance of being able to listen to the market and not to what I call marry our ideas. So that's why I wanted to start it with that, guys, because it's extremely important not just to analyze the market beautifully, but also and mainly to deal with that correctly when the conditions change. Think about it this way: you are going for a trip, you know that you are going to take a highway, you start your driving, and then your Google Maps or Waze tells you traffic ahead. You have two options: or you're going to get stuck with maybe worsening conditions, or you would find an alternative if it's still not too late. Same here, right? The daily chart gives you this road, but then traffic. No buyers, no sellers. What do we do? Or we're looking at alternative, right? To cut possible loss of time, loss of money, of gasoline, or whatever it is, right? You understand my metaphor here. So same with the market. And that's why I wanted to start with that. It's very important, guys, that we learn not just how good to analyze and to adjust technical changing conditions, because that's where traders most focus goes on, but also how to adjust your decisions taking based on what the chart gives you after you are in a trade, not just before, but after the trade is taken. Okay, it's very, very important. So that's what I wanted to give you this quick update. That view of both yens did not change. Dollar yen still remains same, but I personally, for myself, I cut the exposure. I still remain bearish in my view. Cut the exposure, so in case it becomes, and look at that, suddenly that would become like a possible structure here, right? Like a little range, and then second leg, and then the move. It becomes suddenly a possible structure, right? So instead of being exposed to that risk, cut, I keep smaller exposure. If works, perfect. If not, I finish with much smaller risk and we'll be looking for the next opportunity. So that's for the yen pairs. Now I want to go over the euro pairs. Some of them are wonderful, some less. Euro dollar, as we said, as long as we don't have the break of the last high, we don't have the convergence, so we are still in a structure of bearish trend. The idea is to sell the rallies. However, the daily did give us a bullish divergence, right? We ticked up a couple of days ago. Therefore, the 4-hour chart should become a corrective cycle. Now, I've been asked a lot about this bearish hidden divergence. So, hey, Vlad, that's a bearish hidden divergence. Can I go and sell it? So, I want to challenge you a bit, guys. What do you think? Can we sell this bearish hidden divergence? Yes or yes? No, just joking. Yes or no? What do you think? I have one yes, one no. Who else? Two no's. Three no's. Four no's. Good. So the no's are controlling here. The answer is no. Why not? Because when daily is against us, that means the bearish trend as it is irrelevant. So we have to be exposed to correction. Correction is not one leg. Correction is two legs or a consolidation, a ranging pattern. That's how the corrective cycle could happen. So it could happen in two waves or some range. Now it doesn't look like range as for now due to the V pattern, but we definitely could go and get exposed to double wave before we're dealing for the next sell. Make sense, guys? So for the question, is that a good bearish hidden divergence to trade? The answer is no. For bearish hidden divergence or any hidden divergence, there have to be two conditions. Condition number one, lower time frame supports your direction, expected direction. The second very important factor is you don't have nothing against you on the higher time frame. Why? Because the definition of the hidden divergence is trend continuation. How the trend could be continued when the higher time frames have the signs against, right? That's the logic behind checking these two factors. So by saying that, that's what definitely could happen. So euro dollar, by making its structure, this is a beautiful clearance zone that it has right here, is building up some sort of here triple cycle descending, right? This is the place where very likely we will start to face some sort of bearish correction, right? And later on be exposed to possible second rally to make and complete the 4-hour chart two waves. And after that, we can start looking for possible sells. All that would remain as long as this high from the daily chart would not be broken. Because if that's broken, that makes it two false breaks and higher highs. That's a trend change, and we can then start talking about longer buys. Okay? Very, very important. So on the short term, as the long-term picture is still not too clear, for the short term, for the euro dollar, we are building up here this possibility of a cycle. We figure out that we have beautiful zone here of 161.8, clearance area right here, clearance area right here. So if we can climb towards, ideally to make some clearance, clean some stop losses of the early sellers, right? And then we should be looking for short-term sells, which after, with pretty high probability due to the daily divergence, we would be exposed to one more high. Okay, so this is the plan for the euro dollar on the short term, and that's the way it's developing. Now, can we know anything like that when the week begins on Monday? No, and that's the importance of being able to adjust on the go. When the week starts and daily doesn't have divergence, can you know that there will be divergence? No, you can't. And when you see this fact, you automatically adjust from selling a possible bearish hidden, because now there is no reason to sell bearish hidden as the daily has divergence to expectations of double cycle or a range, right? But in that case, it looks like double cycle. You understand, guys? So being able to adjust your plan, and it doesn't mean that you have to sit the whole day long, wait for that to happen. No, it's enough to take a look once or twice per day at that, because all you need is just this. What do I have on the higher time frame? Does that change my current expectations? That's the adjustment. Okay, and that's the plan for the euro dollar, which I wanted to see on the charts. Euro pound, we discussed about the daily cycle, and as we covered here, as long as the 61 holds, we could be exposed to double wave, or we can see the pair building here some fight in a range. The way it looks right now, the pair does that exactly, fight in a range. So there is a good chance we're gonna see that continuing before it's taking off for the further sell. Our sell plan does not change. According to the weekly cycle, we were and we remain bearish going after that. Okay, so for short-term rallies are acceptable, of course. We would be looking for possible setups. Now, with the changing every single day since Monday, Tuesday, and Wednesday, every single day there is something new from UK. Yes to vote, no to vote, good deal, bad deal, no deal, yes deal, and so on and so on. The rumors change every single time some new member comes and jumps with a message, and the pound, right? Like kid, listen to the rumors. Up, down, up, down. The moves are completely random. Well, technically speaking, of course. Okay, and that's what happened on Monday. That's what happened yesterday. And today, like nothing happened. Back on the rally. Okay, so the euro pound so far maintains the correction variation number 2, which is the range. Our plan was and remains sell the rallies. That's for the euro versus the pound. The euro CAD, we are bearish unchanged. Euro Aussie, we are bearish unchanged. And that's all. The euro I covered, euro yen failed, I explained. Pounds, also unchanged situation. Yes, that's ugly. Yes, on the short term, it's extremely ugly and almost untradeable. Oh, for me, with my techniques, it's fully untradeable. For some that are masters to trade with intraday retraces, that's not me. That's not me. I never know to do that. Sorry, guys. Unfortunately, I'm not the one to help you with that. But on the longer view, everything calmly, relaxed, remain the same. We are still under the special cycle up, double cycle down, false break, and bullish pressure. So long term doesn't change. Okay, of course, many things would rely on the fact will Britain Parliament would be able to finalize this crazy story. Most of the times they do. If there will be no dramatical changes, then the pressure should remain and maintain to the upside. So our plan was and remains long-term bullish. For the short term, unfortunately, there are no new opportunities. Same pretty much happens with the pound franc. Again, it looks super duper promising on Monday. It looks super disappointing yesterday, and today back to where it was a couple of days ago. Well, not as high, but going to the same direction. So again, the short, what did I do? Oh, the short term doesn't change our long-term plan, which was and remains ultra bullish with this structure, expecting long-term rally. Of course, short-term retraces and drops back could happen. They are welcome, because when they happen, for those who miss the train at the first attack, it's the time to join and enjoy the continuation. Same said with the pound versus the kiwi. Again, I have nothing really new to show here. The only thing which become better now is the pound kiwi, that after this bearish hidden divergence we got a drop and a false break came in play with a bullish divergence. So theoretically we are building here some bearish hidden divergence right now, so 1 hour chart could provide retraces, and if it does come with a good setup, because that's not a good setup, right? It's one straight shot. But if it does come with some good technical setup and divergence, we could potentially be looking for the next possible buys. That's for the short term. For the long term, the view was and remains the same, like pound dollar, pound franc, and pound cat, and pound kiwi. Here, same. Aussie dollar, unchanged, bullish for us. Now, there is one thing I missed, to be honest, on Monday. Roberto showed me, and Roberto, if you listen, thank you. I didn't pay attention to this spike. That here makes it two valid candles. We got here the convergence idea, which means buy retraces. Plus, the Aussie dollar is building up here the triple high structure. Yes, no two candles rule here, but it's 50% retrace Fibonacci. Triple rally. Of course, we still need this high to be broken, yeah? But assuming it's broken, it's triple rally. Our plan is back to bullish. For conservative longer term run, we do want the daily chart to break the trend line. And that's pretty much it. Okay, that's Aussie dollar. Aussie franc, same story. Unchanged, we were and remain bullish in our view. There is was only one thing against us on the short term here. Okay, it's good for partial. It's 4 hour chart bearish, hidden. 1 hour chart slowdown with a continuing. And that's a good slow little cash out slowdown. It doesn't change the longer term picture, just partials to protect the exposure. And that's pretty much it. Cat franc unchanged, all the same. But here we go. This is a very important one. Kiwi, cat. Now, according to the weekly, as long as we don't have divergence tick, there is a possibility of triple double, right? That's from the weekly. Triple double sell-off. Daily broke the range. Right, so far so good. We might get inside it, we still don't know, but as long as this trend line, because this is the last scenario where we switch to higher highs, higher lows again, as long as it holds, the plan is buy retraces. 4 hour chart got a cycle for us, verified with the 1 hour chart, each of the legs. So we expected retrace and a rally, right? You also have that, of course, in the report from Monday, right? We want to see drops and buys. Now, let's talk about the drops. 4 hour chart, bullish hidden divergence. Could that be applied, yes or no? Assuming we're gonna get here, but we anyway have this divergence at this stage. Could that be applied, yes or no? That's a little challenge, guys, so I want you please to participate and try to assist me. I have yes, 2 yeses. Does anyone think no? 3 yeses. 4 yeses. So no one basically thinks, no No one thinks it's not. Oh, we do. Ross, how are you doing? Why not? I'm curious to hear. Why not? Why this is not something we can rely on? Bearish divergence. That's right. It was bearish here, right? But now we got the correction. The bearish divergence does its pressure. This is exactly what we wanted to see on the short term. My question now, could, sorry, wrong low here. Could that be an acceptable bullish hidden divergence? Or maybe even this one if we break through this low. So, like this. And then the answer would have to rely on lower time frame to provide bullish divergence and higher time frame to be not against. Does the daily have anything against? No. Does the 1 hour chart provide us a buy confirmation? Now here I want you to check clearly. In this movement, do we have a valid bullish divergence? Beautiful. Thank you very much, Catherine. Not yet. It's just one leg. 100% correct. So this has to be completed, right? And then, and only then, the 4 hour chart bullish hidden divergence would be an acceptable thing for a buy. By ideal, what we will want to see is a clearance. We have two levels here. One here, see that? And one spike, but here. So this zone, ideally, of course, this low, because it derives from the 4 hour chart movement. By ideal, this should be done. Once we clean this stop losses zone, this is the place where we can start talking about the buys. And that's the watch list for this pair. Okay, so the correction has to end. In order for the 4 hour chart to become valid hidden divergence, what we want is the daily not to be against, and it's not, and 1 hour to confirm. As Catherine said, and correctly, we still have just one leg. Okay, guys? So watch that carefully. Will that happen this way? How can we know? We can't predict the future. But we do know what we will do, or what we will be looking to do if that happens, right? So we build a plan and we trade our plan. We plan the trade, we trade the plan. If happens, we know what to do. If doesn't happen, there is nothing to do, right? It's like saying, I'll go to the beach if it's plus 30. If it's not, I will not. Very simple formula, right? Of course, in Canada, I can still dream about this plus 30, but you got the idea, right? So that's pretty much the same. We build a plan. We want it to be clear, built, clear, structured, correctly structured, mainly correctly. By ideal, we do want it to clear the stop losses zone, because a lot of stop losses will be located here of those traders who try to get it earlier. By ideal, we want it to clean there, and then we are good to start looking for continuation. So this one is on our pretty hot watch list, at least for me. And of course, we do pay attention, because if it straight goes through 61.8 Fibonacci, right, then remember, this is our daily trend line. That would be very, if it goes through just one leg, like we saw, for example, with the Nasdaq, right, at the beginning of the week, same idea. If it goes one leg, who are we to argue? We never argue, okay? We would accept that and simply, sweetly change the directions. As for now, the plan was and remains short term, looking for the buy setups. Gold and silver. Before I continue to commodities, Any questions? If you have any, please let me know so I can answer. Euro franc. Okay, it's not on my list, to be honest. It's on Jordan's list. He likes that. But I am personally thinking only after buys. Main reason is the fact that well, this spike, of course, ruins that a bit, right? But after the spike, this is the way that the pair was structured. Triple double, bullish divergence. So for me, we are bullish here. Daily chart also provided here. False break at the bottom of this weekly structure range. And that's why, from my point of view, it's buy dips. The last thing we had from the daily was something like that with a bullish divergence. Then this trend line was broken. So theoretically and technically, personally, I think as long as this low holds, it's bullish. However, I do hate trade in situations where we are stuck inside one candle range, this low and this high. That's personally something I don't love. That means that there is no money involved. So that's pretty much it. I don't like it. I know Jordan loves this pair. Again, I am bullish. I just don't love these conditions. I try to avoid them. Okay. All right, let's continue then, guys. Gold and silver. So gold making the corrective cycle we were looking for, coming to a very nice place. This is the correction. Now again, it's one leg, but for commodities, it's not fluent market as Forex. So there is a stoppage, and it's anyway a straight movement for a correction. It's two waves correction here. The double cycle approaching to 100 level clearance was the spike here. That's very likely to become a zone of a reversal here and here. That's the two critical zones we have. That's from the 4-hour chart. 1-hour chart is a cycle by itself on each of the legs. This is a special push, triple push, it doesn't matter, and this is another one. We have the clearance here, and slightly higher is the 161.8. So what do we want to see here? We do want to see the divergence forms. We do, by ideal, want to see that making some kind of false breaks and lower lows by ideal. Yeah, of course, that could happen on lower time frame since we confirm the 4-hour chart cycle with 1-hour chart legs. But we also would accept the turnaround like this, triple high, triple low going down, and then looking for the sells. So two critical levels for gold. Silver is the same here and here, which we will be looking for this possible turnaround structure, which I just mentioned. Okay, silver is pretty much the same idea. Two-wave push, approaching around 100, and that's our legs. The reason I like silver a bit less technically is that each of the 4-hour chart legs we can't really name as a cycle by itself on the 1 hour. The second leg we do, the first leg we can. That makes it a bit more aggressive view. However, our plan was and remains exactly the same. As you remember, after this push here and the two false breaks in play, we are after corrective cycle. Corrective cycle could make it 1, 2. Corrective cycle could make it a range, right? So on short term, sell the rallies. On long term, of course, buy the drops. And oil approaching, well, making the next false break first of all, clearing the high. As you remember, personal view is after sales due to the divergence and the cycle level. We do here after this breakout of the two waves, right? And the fact that we were holding a range here, that was a range in correction. right? So this is developing into this. So the second leg has to become, oops, what's this level? What's this line here? The second level becomes critical here. And what we want to see is this recreate divergence. So taking a look on the MACD, right? The divergence is gone. So we want the divergence to, not gone, but never created yet. So we want that to make a clear divergence here. We have it completed. We have a sell. Okay. Meanwhile, we are on a fence, watching for that to form and structure. DAX, we are still waiting for the lower low to be created. Still refusing to do so here. Okay, so no updates here. And the Nasdaq, which went through the last daily high, again doesn't change the cycle, doesn't change the weekly sell rallies after convergence plan, does change the structure and does change the timing, because now we have to wait for the next set, which means new lower low or new structure of lower highs, lower lows, and sell the rallies. Meanwhile, it has to be removed. On the short term, for long term, doesn't change the plan, just the timing. And that's pretty much it. Which ones are the most interesting on the list? Euro dollar, gold, silver. We do have the Kiwi CAD on the follow-up list. Very interesting. Aussie and its combos. And we do have the oil, but I don't think it would be actually providing anything on the coming few days left. I think it will take some time with this one. So that's all for today, guys. Few very important things which I want to discuss at the beginning. I hope it makes sense for you. And it's very important once in a while to remind that, technical is important, the psychological barriers, the psychological things, the management when you are in, not just with the preparation when you are before the trade, is extremely important. That's all. Thank you very much for being here. I wish you a wonderful evening, and tomorrow it's live room with Jordan. I'll see you soon in the telegrams. Ciao for now. Thank you for being here.